Joins us on the show. Arvind, hi, good morning. Thanks so much for making time and speaking with us. And still New Year's greetings to you. It's still the first week of, 2025. And how do you think it's likely to turn out, 2025 versus 2024?
Well, Happy New Year to you and your viewers. So listen, I think 25 is starting out on a mixed tone, mixed in the sense that we've had, certainly from a US standpoint, we've had a fantastic year that just went by. A lot of things went right. A lot of hope built into the expectation of the incoming Trump administration, what they will do to drive growth, to drive economic performance with lower taxes and less regulation, and obviously AI is promising a lot of wonders, although the stocks have reflected that. My view is that this year, certainly, and I'm going to contrast the US and then I'll talk about India and the rest of the world. For the US, I think a lot of good news is discounted, and I think we could have some challenges. And the challenges could be that inflation might make a reappearance. It may not be quite as smooth exit as the Fed has been hoping in terms of continue to lower rates. So I think we could see not much more room for the Fed to cut if inflation gets stubborn and stuck a little bit higher. The rest of the world has been much more of a struggle. Europe has been a struggle. China is clearly disappointed. And frankly, India in the last, few months has been disappointing. I don't see any clear signals, at least in the first quarter, why anything in the global front will change. But if I were to bet today, 25, could be a year where US underperforms and other global markets outperform, just because others have underperformed so much, not because I have anything in my crystal ball that tells me any specific thing that's going to go right. But, for India, I would say that the growth slowdown that we're in the midst of, hopefully, we're going to be looking at the end of 25, looking back and saying that was a, couple of quarters problem, and now things are starting to get back on track.
Are you also penciling in a dollar reversal because the yield is already at an 8-month high? Would that also sort of push flows back into emerging markets and India?
The dollar reversal is harder to call, especially if the Fed is going to not be, cutting as much as we had all hoped a few months ago. And if the Fed is not cutting and keeping things tight, then, the dollar could remain somewhat strong. But because, for instance, Europe is cutting much more aggressively. China needs to stimulate its economy, which means continue to lower interest rates. So from an interest rate differential standpoint, US dollar could remain somewhat strong. But to the extent that US budget deficit continues to blow out, then that could provide some downward pressure on the dollar. So I don't have a clear crystal ball, given the competing forces on the dollar versus other global currencies, where the dollar is going to significantly weaken or not.
So Arvind,
if you like this video, then like, share and subscribe to ET Now.